Okay, here we are. Today is Friday, February 27, the last day of trading of the month of February. And we're here from the floor of the New York Stock Exchange. As you know, my name is Victor Rodriguez from FI Macro. We're here with Steve Alain Lauren, who's the Chief Investment Officer of Balfour Capital Group, and Andrew Schreiber, who's the founder of Schreiber and Associates. Not only that, he's been regular in this Tribune, and we're going to talk about an important topic. Let's try going forward with Andrew about what's going on in the private market, because there is a sense of stress that is happening today when we know a lot of news about that specific bucket. Thank you, Andrew, for coming. Thank you, Steve. Andrew, if you can explain a little bit what's going on from a 10,000 feet altitude, that would be great, because a lot of people are feeling the anxiety on the market. Thank you for coming.
Afternoon. Thank you very much, Victor. Thanks, Stephen. Hi. Private credit market is something that really, from our perspective, we see growing very, very rapidly. Main reason being it's just totally uncorrelated to stock markets, and to within a certain element anyway, to a certain degree, we find that all the world politics is going on at the moment, which we know is in a huge mess, doesn't affect it either, which is also very, very good news. And it's something we've been passionate about and pushing for, the last 9-10 years now. And it's only very recently where we found that the big institutions are actually starting to come on board as well. But with one big difference from what we do is the big institutions package up private credit opportunities and resell them in their own framework, in their own packages, whereas we deal with people who go directly into the private credit market, where we have full transparency, we have guaranteed capital guarantees, we have fixed returns, and it's growing so fast we can't keep up. As simple as that. And I think more and more people are realizing this is the way to go. We're seeing it in the news, we're seeing it in the media more and more often, and I think Steve will agree with me on all of this.
Yeah, absolutely. And Steve, I don't know if you can tell us a little bit about, we were discussing off camera what's happening with the big firms. Blue Oil is coming down dramatically from the highs. Please.
Okay, basically right now you've seen, the private credit market with the KKRs of the world, Blue Owl, they've gotten hit very hard. Okay, but let me explain something to you, which is so critical for people to understand. When there is a distressed market, there's always value. And when you look at a very specific part of private credit, okay, and there's a big company that trades on the New York Stock Exchange called Buford. It's the largest publicly traded litigation finance company. You're going to see global opportunities. One of the global opportunities that we see is Woodville litigation, okay, out of the United Kingdom. All right. And what's the correlation? They have a distinct underwriting model. South Florida, every other sign you see, okay, call this law firm, call this law firm, call this law firm. Well, someone has to be behind that capital. And when you look at the rate of return, what separates Woodville from many other companies is the size of the loan and the duration of the loan. They have a sweet spot, and they have a world-class CEO, Anne-Marie Bell. She's an icon in the industry. She actually was one of the people who invented the industry in the United Kingdom. I would consider her to be the Morgan & Morgan, okay, of litigation. Okay, John, Morgan & Morgan, he just made Forbes. And how did he do that? Through litigation financing. So
let me ask you something. I think another important part when we are seeing today, again, just for the record, February 27, 2026, the first day since I think November of last year, where we're seeing the 10 years again below the 4%. And then is when people with that anxiety are looking for, number one, to evaluate what is causing that, which we know is a lot of anxiety on the employment side with major companies. And the other part is, how do I allocate? Where do I put my money? So Andrew, I don't know if you can tell the audience, what is the typical rate of return you can find when you invest in those vehicles? And obviously, as you mentioned, it's pretty important. It's a non-correlated one, which is probably something that most of the chief investment officers of today are looking for the next quarter. So if you can articulate on that, not only on that, but on liquidity, that would be great for the people that are looking for where are the opportunities today.
Very much so. I think, look, a lot of in particular, the private credit opportunities which we tend to evaluate and which we approve and we work with, we're looking at anything, and I mean, they vary between 10 and 21, 22% per annum, and all of these can be paid either as a regular monthly, quarterly, or an annual coupon. So there's a regular income coming in for people. And normal duration for these things is a minimum of a 12-month lock-in. Which is acceptable because it allows them to manage their businesses and their books very well. When we come back and we look at the one in particular, which Steve has mentioned, the Woodville litigation funding, the model they have is tremendous. People look at these things and wonder, well, how can it be so good? How can they do this? So depending on duration, they pay 10, 11 or 12% per annum with a regular quarterly coupon. But probably what is most important to look at with these in comparison to the big litigation funders, and this is something Steve touched on, is that the loans are very, very small, all right? They vary between £1,000 and £5,000 maximum per loan, plus the maximum duration is 6 months, okay? And there's an interest charged on the loans to the legal firms of 5% per month, okay, which gives them a regular cash flow and a regular income. All right. These things are all very important. It allows them, to diversify amongst many, many cases, every single one of which where liability has already been, admitted. So all of these cases are against insurance companies, against banks. So the chance of default is basically zero. They allow a 1% possibility of default, but to date have had zero default. You compare this to the large litigation funds, who deal in multi-million-dollar cases, which tend to run for years at a time. They only get a payout if they win, There's no interest charge. There's a percentage of the win. That's it, So the risk is a lot higher. And if I think I'm correct, Steve will back me up on this. I think they allow for a 30% potential default rate, which is quite big, as opposed to 1%, which Woodville litigation allows for, but to have a zero default. I mean, the model is just it's perfect.
Yeah, I mean, listen, you just saw yesterday, all right, for example, where a big buyer came in called Saba Capital, and took a large position in Blue Owl. What does that mean for the little guy in Woodville? Woodville is very, very unique in the sense that it's exactly what Andrew said. It's about the duration and how long is your money locked up for and the turnover. Because what I can definitively tell you is on a global basis, as the underwriting models get faster, the turnover will even be faster. All right. So that's the key. All right. That's the key because they know what the numbers are. And there's a big demand for that in the UK, just like the United States. I mean, like I said before, you've seen, companies like Morgan & Morgan. You've seen companies that are private like Oasis Financial that constantly are lending on lawsuits. All right. Slip and fall, I slip in Walmart. What's going to be the outcome? All right. So it's a big business that has tremendous upside, and it's a true diamond, in a very complex market. And it's
Steve,
fine.
I have an important question. We're here at the Florida New York Stock Exchange, and as you know, the iconic capital markets of the world. Steve, it is a company by the name Balfour Capital Limited. And they basically trade here at the floor. That is basically, I think on my left hand, the specialist, just so you guys know probably, let me take up a visual there in the other booth. As you can see, we're in the Florida New York Stock Exchange with Andrew and Steve and Lawrence. Tell me about that company, because when I was checking, they are at the low bracket of the 52-week range. And I don't know if you can tell us what's going on there, because obviously when we speak with Andrew, it's right. There is no default, but the anxiety is there, which might imply that it will be a great opportunity to accumulate at this level, specifically when you mentioned that Saba was getting some sort of portion of Blue Owl. If you can articulate on that, Steve, that'll be great. So the audience will understand that opportunity, though.
Okay, let me say this to you. Buford has some incredible institutional holders, all the big boys. All right. Now it's following the market. You see, it's the type of company that'll follow the rest of the credit, the private credit markets, like the KKRs and stuff like that are invested in a Blue Owl. The difference is that they strictly focus on litigation funding. All right. However, within their book of business, all right, they do have large commercial lawsuits. whereas Woodville, okay, specifically sticks to one sector, which is a consumer to consumer, it's consumer, all right, as opposed to large litigation commercial. So it's in general part of their book of business when it comes to litigation financing, which are the smaller law firms that need capital to turn over their credit facility. So as rates continue when rates or if rates go lower, it'll put Buford in a very, very strong position. I believe at these levels, I would be a buyer of Buford. Okay, I would be a buyer of Buford at these levels. In the entire private credit market, in very selective places, you saw KKR themselves step in and buy more. All right, because in any loan industry, there'll always be bad loans. It's just what it is. All right, but it's the percentage of bad loans versus the percentage of good loans that perform. And when it is a new product, okay, meaning private credit in general, there's a lot of different layers to it. So you have to find the right specific asset class within that vertical. And that is small claims, like Woodville, okay, that have small claims, all right, and they could do many of them at a time because of their underwriting engine, all right. They could
listen, Andrew, if you can actually give us some sort of the floor feels the anxiety today. As I've been seeing the market, Steve been speaking, markets are in what I call a little bit of turmoil. The Dow Jones touched around 700 points down, and it's the end of the month. If by noon or 2 p.m. Eastern time, we don't see the machines buying this back, it might be an ugly start for next week for March. If you can give us the closing remarks about this interview and the opportunities, that would be great, because obviously I think we might be touching some interesting points to accumulate. You certainly for the long term buy any dip, and I think we are right here seeing one of them. So if you can give us that would be great. And then you, Steve, give us also your closing remarks. That would be great to understand specifically what to remember about this interview.
Thank you, much. Yeah, I think very much. I mean, for me, it's pretty simple. I mean, these private opportunities we look at, number one, there's full transparency. There is security right the way through, from capital security, investment security, through to the regular fixed income and returns for people, all in double digits, okay? And also there is zero volatility, right? As far as their history goes back, there's zero volatility. And what you see happening on the markets today does not affect them and will not affect them.
Excellent. Steve, closing remarks, 20 seconds, all yours.
In my closing remarks is as follows. Woodville litigation is in a very, very specific sector that has tremendous amount of long-term viability. The management team is one of the best pound for pound in the world, and I can say that. Anne-Marie Bell knows how to run a litigation company, and that is truly the bottom line. That's why the public, okay, the small guy has the ability to invest alongside true institutional money and get the rate of return that they can get. And that's why Schreiber and Associates and Balfour are raising capital so more loans can be funded and our clients could make more money over the long term as well as the short term. That's truly the bottom line.
Thank you very much. We're here live. Actually, as you can tell from the Florida New York Stock Exchange, you might be seeing this interview later on next week. But the markets definitely are giving us some serious opportunities if you have the ability to sustain that volatility on a non-correlated low volatility product, as Andrew and Steve were telling us. Thank you very much. My name again is Victor Hugo Rodriguez from FE Macro, and definitely we'll get back to you. Thank you, Steve.
Thank you. Thank you.
Thank you, Victor. Take care. Bye-bye.
Take care, Andrew.
Thank you.